It's the first business day of the week after the Easter holiday. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwagu. Coming up, most of the passengers on board the Egyptian airline that was forced to divert to Cyprus have been freed. Hijackers arrested. World Economic Sales Managers Index data for Africa indicates another slowdown in economic activity across the region. Plus, Barclays Bank warns that commodities including oil and copper are at risk of steep declines as recent advances aren't fully grounded in improved fundamentals. Well, we'll begin with the EgyptAir plane hijacked today as most of the passengers on board the Egyptian airline that was forced to divert to Cyprus have been freed. EgyptAir said negotiations had resulted in the release of all those on board flight MS-181, apart from the crew and 4 foreign passengers. The hijacker has been arrested. Now, the hijacking was the latest blow to Egypt's efforts to project an image of stability to attract tourism and investments 5 months after the downing of a Russian passenger plane over Sinai, an attack claimed by the Islamic State group. Tourism, a major source of foreign currency receipts for Egypt, has struggled to recover since the downing of Russian Metrojet plane. Now, the latest report by the London-based World Economic Sales Managers Index data for Africa indicates another slowdown in economic activity across the region. The index fell to 56.3 reading in March from 57.8 in February, posting the 4th consecutive month of declines and the lowest level since August 2014. The report indicates that business confidence, market growth, and product sales all contributed to the lower SMI reading. In addition, employment levels declined, while prices charged saw the sharpest increase since April 2014. Overall, the data suggests continuous growth over the coming month, but a slowdown in activity will likely persist. In terms of ranking, Nigeria continues to lead the Pan-African expansion, despite easing of growth to a year low. South Africa was again in the 2nd position, Egypt in the 3rd, and Algeria 4th. Stocks in Australia hit near 1-month lows today as banking shares fell on continued investor concern around bad debt after opening lower following an extended break over Easter. Sydney's S&P ASX 200 closed down 1.6%. In Japan, the Nikkei 225 closed down 0.2% following a raft of official data that dented investor sentiment. Hong Kong's Hang Seng Index was down 0.3% in afternoon trade, while the Shanghai Composite fell 1.5%. South Korea's benchmark Kospi Index was the one bright spot in the region, finishing the session up 0.6%. Welcome back. Well, commodities including oil and copper are at risk of steep declines, and recent advances aren't fully grounded in improved fundamentals. And that's according to Barclays PLC, which warned that prices may tumble as investors rush for the exits. Copper may slump to the low of $4,000 a metric ton from $4,945 in London last week, while oil could fall back to the low of $30 a barrel. According to reports by Barclays, investors have been attracted to commodities as one of the best performing assets so far in 2016. However, in the absence of any concerted fundamental improvements, those returns are unlikely to be repeated in the 2nd quarter, making commodities vulnerable to a wave of investor liquidation. Well, just before we look at the details of those commodities, let's join DWTV Channels TV correspondent standing by there at the Frankfurt Stock Exchange, Ulrich Barth, to give us the details of what the European markets looked like today. Good afternoon, Ulrich. Thank you for joining us. I hope you enjoyed the long Easter holiday.
Thank you. I had a great time. The weather wasn't all that great up here, but yeah, it was nice to be off for a little while.
Oh, Oh, well, I envy you there. I was at work, though, but I enjoyed the holiday. Anyway, Ulrich, the EgyptAir hijack early today, coming up after last week Brussels airport's deadly terror, has heightened fears about the commercial aviation and airports businesses. What are the discussions now at the marketplace, including the shares of airlines, travel and tourism companies?
Yes, these kinds of shares now are on a watch list, if you will, Jimmy. They took a hit when those terrorist attacks came. They went down. Some of them tanked, and they've since recovered a little bit. When I look here, for example, in the German market, the two shares that were affected most were Lufthansa and Fraport. Fraport may not be a household name around the world, but it's the operating company for the Frankfurt airport, and both of those shares are clinging on with a plus today, and that sort of mirrors investors' reactions over the medium term and then the long term. When I spoke to people right after the attacks happened, they said a horrible thing, and investors do react in a very, very clear way and say, this is going to affect the business, this is going to affect the sentiment of the traveling consumer. But in the long term, when one looks at these shares, even shares of companies directly involved like the airlines and the airport operators, one doesn't see all that much of a hit. And this continues to be the sentiment now, a few days after these horrible events.
Oh, well, while we keep a watch on that, let's look at the commodities market here. Barclays Bank analyst notes today warns oil and commodities prices will falter as investors rush through the exit door. What's the short-term trading sentiments for oil and metals?
For oil, it could be very well that there's some profit-taking. There's concurring analyses from German analysts as well that oil has actually had quite a good run this year, since the beginning of the year. Equity is not so good, but gold, for example, a good run, oil a good run, WTI, the American light crude, or Brent, the North Sea oil, both up 5 to 6%. For the year, and with speculative business on the futures and options exchanges for this stuff, people see that there's a danger of profit-taking. That is, oil could go down a little bit as we look forward. Not certain, depends on the development of economic growth figures, interest rates, the dollar. All these impact the oil, and incidentally the other commodities too. The other commodities will be I think just as dependent on current statements and facts and figures about the economy.
Now, Ulrich, a number of economic data are on tap this week from Europe and the United States, and the Fed chief Yellen speaking in New York. Will the markets rally this week on these headline grabbers?
Yeah, it's a really big week. True, Janet Yellen is speaking today. She'll be speaking shortly and impacting the market before the close. And at the end of the week on Friday, there's the big job market report coming out for March in the United States. Now, that includes data about the employment rate, the unemployment rate, the number of people employed, the number of new jobs created. And when I look back on all the past months and years that this monthly job report has come out, it's always impacted the market. And more often than not, and this is the tricky thing, it's offered a surprise. And when it has offered a surprise, the market has also taken a surprising turn. So it's hard now to say, yes, the market will rally if the job market develops in such a way. It's just so hard to tell ahead of time, but this is a major focus, as is Janet Yellen. Talking today, one will look for every clue as to when interest rates will move up in the United States, and if they do in April, as many people expect, they want a clue from Janet.
Oh, thank you very much, Ulrich. That was Ulrich Bart, DWTV Channels TV correspondent, reporting there from Frankfurt Stock Exchange.